Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Apple report for Wednesday, February 21st, 2024.
But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already, subscribe to the Wicked Stocks YouTube channel, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever.
Let's take a look at the charts. I'll cover the big picture just a bit here, and then we'll work our way into the day itself. The 175.81 former channel top that we tested quite a bit a month and a half ago may be in reach over the next week or two, but we do not have a clear indication of that. I'll get to that in a moment based on Tuesday's activity. We came close, but not quite. But if tested over the next week or two, 175.81, this channel top that we tested a month and a half ago and settled above, even more distant than that. That was, I think, a November settlement. We fell back, as I recall, in December. I'm just going by memory here. 175.81, able to contain selling through March, possibly all the second quarter. And from here, we can and should turn up. Turn up to into the mid to upper 190s within a month or two, and onward and upward to new all-time highs as we continue into later Q2. If we were, of course, to close the week below 175.81, we enter a 3 to 5 week sell signal down to what I consider to be ultra long-term support in the 162.88 to 164.30 region, where we could bottom out through the rest of the year, and above which I'm still going to be looking at this 4-year channel top at 237.97 as a reachable objective over the next full year or sooner. Let's get on with the day itself. Just to catch you up just a bit, I'd mentioned how this speed line, if settled below, should then indicate that 175 handle support I was just showing you on the previous chart. And, we've got no clear indication of that based on Tuesday's activity. As we traded the day, it certainly looked like we were going to close below the 181.09 speed line, but we did not. So what to make of it? I call this sort of neutral. I mean, obviously, over the last week or two, this market has been in a lower low, lower high dynamic, so there's no arguing that. But I will say that right now, it comes down to this very short-term channel top at 183.50, a sellable level that could contain buying into later week, and we could fall away from here. And then certainly if we then close today below 181.09, a level we've reduced to a minor point only because of how sloppy it's become the last few days. But if we were to close below 181.09, we would point that out. And then certainly holding below, I guess really what I'm trying to say is we remain on the defensive through the rest of the week below 183.50, a level that may well contain not only daily buying pressures, but we could fall back from here. That lower low, lower high dynamic remains clearly intact today and into later week below 183.50, dropping daily, able to contain session strength. Downside, there really isn't much to hang your hat on until we get down to 178.67. I don't know if we'll see that today, but if we do, it may well contain selling pressures through the balance of the day. But it really is 183.50 is your short sale for the day as a day trader, and quite possibly through the rest of the week as a 3 to 5 day swing trader. From there, we could fall to 178.67 within 3 to 5 days, and perhaps all the way back into the mid 170s by the end of next week. I'm not calling the mid 170s a target below 183.50, but it is something that is certainly in the realm of possibility here, in reach, attainable, but I don't have it as a clear-cut objective. I would begin to suggest as much once again if we close today below the 181.09 speed line, but we didn't do that, and we've yet to do it since we closed above it about two and a half weeks ago. let's continue with the upside. That I was going to say if we push through 183.50, great, but I don't see 186.90 today. If we push through 183.50, I'm going to say that if we close today above 183.50, no good reason to be short Apple if you're a short-term swing trader, because over the following 2 to 3 days, I think 186.90 is likely. Another session containment level, descending two-thirds speed line that is based on the recent high from a couple of weeks ago. 190.35 is our next weekly resistance area, a descending two-thirds speed line. This chart actually sort of depicts what I would consider to be the 3 to 5 week two-sided framework, where you're buying the mid 170s once again, long-term support I've been showing in this video. We also, by the way, wrong chart. We also have a descending channel bottom at 176.31. Once again, there is all kinds of really good support in the mid 170s. I don't know if we'll see it, but if given the opportunity, solid zone to buy into, cover a short position, go long for a day, for the week, through March trade, and even into later Q2, as I've been saying. But back to the upside, if we close today above 183.50, I would expect 186.90 tomorrow, where we could also top out on a daily basis. And if we close above 186.90, 190.35 expected within several days. It is very stair-step on the way up. The only 2 to 3 to 5 week opportunity I see for that time horizon trader is really, bottom picking the mid 170s and selling the low 190s on a weekly basis only. And in fact, what I'm going to say here is if you can bottom pick the mid 170s, you can hold out within 3 to 5 weeks to the mid to upper 170s, 195.46 to 197.41. I'm not calling this an objective unless we close above 190.35 or unless we happen to slip into the mid 170s. If we slip into the mid 170s, I will begin suggesting the mid to upper 190s as a realistic 3 to 5 month target. And once again, if we close below 175.14, we have a 3 to 5 week downside objective in the low 160s, a scenario that I'm not expecting anytime soon. Buying the mid 170s, selling the mid 190s. It's about as simple as that. And inside of all that, we have this series of pivot points, 183.50, below which we can fall back into the mid 170s perhaps by the end of next week. Above which, expect 186.90 by Friday's close. Above which, expect 190.35 within several days. I wish I could say that closing above 183.50 for you 1 to 2 week swing traders would indicate 190.35, but I really just can't do it. I don't see it. I do respect 186.90 in its ability to also contain daily buying pressures. So I hope this isn't confusing. I've said a lot, thrown a lot of numbers at you. Please click like, share, subscribe. Check out wickedstocks.com for that 5-day free trial. I'll be back tomorrow, of course, with Thursday's Apple. You have a great day.